All righty, traders. This is Blake Morrow. You were listening to the Daily Roundup. How's everybody doing? Damn stock market. It is unbelievable. I shouldn't even say that. I shouldn't even say it. It's not unbelievable. It's just strong. We are up against resistance here. I mean, I think obviously if you go to the trend line, we can make it all the way up another 30 points or so. We are just right at the 618 retracement, literally right now, of the entire move. So we're right at the 618. You can see it right there. I mean, I would think we stop somewhere around here, but at the same time, the markets aren't pulling back. And that's just pretty wild to me. It's like, Fed's going to taper. No one cares. Like, I don't get it. Or maybe it's the Evergrande thing. I don't know. I don't know. But like I said, I'm really, really, really surprised we haven't even had a pullback. And when you don't have a pullback, like intraday, so you go to the hourly chart, we get a rally and we don't even pull back. That's not a good sign for bears. I mean, I'm laying into some short, emerging market currencies here, and it's like, do I stay with them? Slightly out of the money in the dollar MEX, slightly in the money in dollar rand. A little out of favor with my euro yen, but not much. But it's like, the markets continue grinding like this. It's tough. It's tough to stick with it. So anyway, we'll see how the end of the day shakes out. But one of the things that I always try to think about in these types of situations is, how many of you guys are in Europe? Gavin, Alexander, Andrea. And I know there's multitudes of others that are, right? They're, listening in right now. You guys are in Europe. It's getting late there, right? You're like, yeah, I'm about ready to pack it in. I'm going to go spend some time, Jane, in Spain. I'm going to go spend some time with my kids, my family, some friends. I'm about ready to pack it in for the day. And a lot of times North America likes to wait for you guys to leave. Just when we think you've got you out the door, that's when we make our move. I'm just kidding. I'm joking, but I'm not. It's like a lot of times you'll at these, you leave, you turn things off, and then all of a sudden the market goes, does its thing. I'm not saying that's going to happen today. I think if it reversed here, it would be a perfect reversal of this Gartley. But anyway, let's talk about some currencies really quick. So the euro, that huge options expiration, at 117, we just held above it and we haven't retraced yet. No, like if I own the euro, I have no reason to sell euros right now. But stocks continue to go up. Why am I going to buy dollars? So there's that. Sterling, hell of a bounce. I mean, look at this thing. Following the Bank of England, but even before that, I mean, it's just bouncing like a bat out of hell. We're nearing our 50% retracement. We cleared all this previous support. I think it may have held us for like an hour, maybe. Aussie broke this downtrend line. We're nearing the 38% retracement. Kiwi's been strong, kind of showing its strength once again. But like you take a look at the rand, like I bought this earlier today at 1469. Let me look. 67. Sorry, bought at 1467 earlier. That's right, when I thought it was a false breakdown below the support. And I mean, it's doing fine, but it's like, am I going to stick with it? With stocks at all-time highs, or not at all-time highs, I'm sorry, but strong, dollar Mexican peso. I mean, it's holding above 20. I think this triangle is holding up. I like the dollar Mex overall. It's just not acting really well right now. So I'm probably going to stick with it. Especially we're past Wednesday and like the, high interest payment type of day. Dollar yen right up against like major resistance here. I think all this between 110.20, 110.40 is going to be big. And you know what else is happening? Gold. I mean, gold doesn't rally with risk assets, and it just doesn't rally in general. I mean, that's pretty worrisome if I was bullish gold. I was just having a conversation with Giles Coughlin, he's the chief strategist at HYCM broker out of Hong Kong. He also does some stuff for Forex Live, and contributes at Trader Summit and stuff. And we were both talking about gold, and one of the conversations that we had not on camera was, he's like, I get the narrative, why people are bullish gold, but what happens if inflation eases a little bit? Then you kick the leg out from the stool, the three-legged stool. You kick one of the legs out, and next thing you know, gold's going to be lower levels. Look, I cannot for the life of me figure out why gold's so weak, but it is, and that's the thing we have to realize, right? Take a look at the bond market. So yields are going up, bonds are dropping, rates are going higher, which would confirm why the dollar yen is so strong today. K-Man jumped in the chat room, or wait, hold on. Ryan, no, wait. One of the guys, Ryan or K-Man, jumped in and said, hey, one word before I go, bonds. I forget who wrote that. I got to go back and look. But yeah, look at yields are moving. Bonds are starting to move lower. So that we should take note of that, yields are moving higher, but are stocks going to really, are stocks going to like it if yields continue to race higher like this? My opinion is probably not. Right. So anyway, you got yields moving higher, which is helping the dollar yen. But like I said, will stocks eventually take notice? We'll see. Chad said, or Jason said, a lot of Twitter peeps frustrated with gold right now. I mean, I was, who did I have? I had a conversation with Peter Buckvar a couple weeks back. And I kind of made the point of gold is underperforming. I didn't realize he was such a big gold bug. He sounded a little irritated with me. I'm like, hey man, it's just not really acting so well right now, but I mean, gold is one of those things. It's it's an asset like cryptocurrencies. People get really attached to it, very, they call them gold bugs, I'm sure we got Bitcoin bugs, kind of like Paul Franco's bed bugs, something like that. Anyway, anyway, that's pretty much it, guys. I have to say, just watch stocks. I'm going to leave it with this: dollar index back down towards support, but in this range, right? S&Ps, I feel, are pretty big resistance. It is the 618 fib. Please take note of that. I think between here and the underside of this trend line, and probably these highs right here, so between 44.85 to where we're currently at 44.50, or 44.50, 60. This is all going to be really good resistance. Now, I don't know if it will contain the market. I, just like you, look at the market every day in kind of disbelief, scratching our heads and going, wow. Right. So you have to take that into account. I think it's worth a shot if, a risk off type of move from here, but also you have to put in your mind, if we break above 4,500, it's probably going to all-time highs, more than likely. All right, guys and gals, thank you so much for joining me today. I appreciate all of your support as always. I'm going to interview Dave Keller from the CMT. Dave Keller, he is a CMT. He's from the CMT Association, but he's part of the CMT Association. He's a really good technician, and we followed each other for years. I'm pretty excited to actually sit down and meet with him. He'll have some good charts, so be on the lookout for that today. And then I'm also meeting with a guy. Some of you may know him. His name's George Perks. He is with Bespoke, I think. I have to go back and check that again. Bespoke Investment Group. One of the smartest analyst guys that you're going to meet. Him and Mark Dow chatted up quite a bit, and we followed each other for years. He's just one of those guys that's very intelligent. So I'm interested to hear his take on monetary policy as we head into the end of this year. And I think you guys are going to enjoy it too. So anyway, thank you for your continued support. You guys are awesome. You guys are awesome sauce. I'll talk to you. Bye-bye.